Welcome back, everybody, and thank you for taking a moment to check out my video. Today's stock review is Airbnb, ticker symbol ABNB. As many of you are aware, I'm sure Airbnb is a consumer discretionary stock in the hotel industry with a market cap of $78.4 billion. Please, if you could do me a huge favor and like this video and subscribe to my channel, it would really mean a lot to me and it would help us grow our community so we can share our passion for investing with others. Thank you so much, guys, and with that, let's get into it. So I'm going to start in Airbnb's most recent shareholder letter from Q3 2023. I could not find an earnings presentation, so this one will have to do. It still has a ton of great information. So scrolling past some of the key financial stuff that we'll look at later, I'd like to point out that their key business metrics, the gross booking value of the company, increased by 17% year over year, or 14% excluding Forex changes, and 89% over the last 4 years. Their total number of nights and experience booked increased 14% year over year, or 32% over the last 4 years to 113.2 million in the prior quarter. This was driven by growth in all regions, which is good to see. Q3 revenue was up 18% year over year to 3.4 billion, and their net income was up to 4.4 billion, which included a one-time non-cash tax benefit of $2.8 billion. So we can knock that off to understand the actual net income outside of this tax benefit, which would have come out to be $1.6 billion for quarter three, which still compares favorably to their net income from 1 year ago. And finally, before we look at any of their financial numbers, I did want to go over regulation quickly because in September 2023, Local Law 18 went into effect in New York City, essentially banning short-term rentals. Now, the reason New York City did this is because there's the idea that these short-term rentals could be used for people actually living in New York City and would bring down the price of living and renting a long-term kind of normal rental for people who live and work in New York City. Whether or not that will happen, we will find out, but it is important to note that prior to September, New York City represented 1% of Airbnb's global revenue, which is a decent hit to the company. But in more positive news, approximately 80% of their top 200 markets by revenue have already gotten some form of regulation. And so the idea is if 80% of these top 200 markets are already regulated, hopefully there's no more regulation to come and Airbnb will not suffer another major hit as they just recently did in New York City. And so getting into the financial numbers, we can see that the revenue of Airbnb has grown substantially at 27% per year since 2018. It looks super good. EBITDA also looks really good, growing at 125% per year since 2018. As expected, the company took a huge hit in 2020 following the pandemic, but they've gone EBITDA positive in 2021 and have continued to expand that over the trailing 12 months. Operating earnings have shown substantial growth as well, which is again good to see. Airbnb's gross margins are pretty enviable, hovering between 75 and 82, 83%, which is excellent. The company really doesn't have much in the way of assets because it's a platform for people to use their own stuff to rent. So this gives Airbnb really excellent margins, and I would consider this a highlight of the company. Operating margins went very negative for a period of time, again, due to COVID and the growth phase of Airbnb as a company, but that has since gone positive and is currently sitting in the mid 20%, which is a good number to see, and it is expanding over time. So hopefully we'll continue to see that grow into the high 20% or maybe 30% in time. The company's trend in growth on return on assets is also really promising, starting at approximately 0% in 2018 and now sitting at 25.5% in the trailing 12 months. So hopefully they can continue that trend. Airbnb's shares outstanding jumped massively in 2020 following their IPO, which is to be expected. That's how IPOs work, and have since stayed fairly steady. So I can't complain too much about the dilution, even though there is some dilution on a percentage basis. It's single digits, and so you're still being able to partake in the majority of the company's growth. Airbnb is also continuing to build this cash and short-term investments, which I think is a very prudent move considering that we might be on the precipice of some economic issues, and Airbnb as a discretionary company is going to need that cash in order to survive the potential down move in the economy that many people are predicting. Its long-term debt has stayed very stable at just under $2 billion, which is really good. It's a very manageable number and is less than the total amount of cash and short-term investments that the company has. So if they wanted to, Airbnb could pay off all this debt almost instantly. And due to that large amount of cash on their balance sheet, we can see that their annual net interest expense is generally positive, meaning the company just gets paid to hold on to its cash, and the amount that they get paid is even more than the amount that they pay out to take debt. So all in all, really great picture for Airbnb's balance sheet. Levered free cash has rocketed higher in the recent years. And I really don't see any reason why this number can't continue to improve as Airbnb transitions from its max growth phase into a more operating efficiency phase. Free cash flow per share looks much the same, and I expect this number to continue to get more and more positive over time. And moving over to the value chart, we can see that since the company IPO'd in late 2020, it's been in a bit of a slow, steady downtrend, but the valuation of the company has quickly caught up to its current stock price. At a fair value PE of 15, which is where I would start for most companies, we can see that Airbnb's fair value is currently sitting at $125.40 versus its most recent close of $122.64. So I would say that at the worst case scenario, Airbnb is probably fairly valued right now. What is interesting is that its projected compound annual growth over the next 5 years is 20.75%. And generally, for any company growing over 15% per year, I like to use their growth rate as the fair value PE for that company. So if I change Airbnb's fair value PE to 20.75, we can see that currently the stock looks much more undervalued, with a fair value sitting at approximately $173. Now, this estimate of $173 is highly dependent on Airbnb's ability to continue to grow. But if Airbnb can grow over time, we can see that it's currently sitting at a very good margin of safety. And I personally think that Airbnb has a very strong potential to meet these numbers outside of any major economic recession. So overall, I would call this a very intriguing stock and worthy of more investigation. And for my final thoughts, what I really like about the company is that it's showing extremely solid growth. Airbnb is growing in all of its markets, and even in its most established market, North America, it's continuing to show small accelerations in its growth rate. Airbnb is also asset light, meaning it does not have a ton of assets around the country and around the world. These houses are not owned by Airbnb, they're owned by regular people who then list on Airbnb. So Airbnb's costs are essentially the costs of operating their platform, and that's about it. And finally, it is the top short-term rental company on the planet, at least that I'm aware of. There are other competitors like VRBO, but if you ask anybody on the streets, the first company that comes to mind, I think for 9 out of 10 people, is Airbnb. And so I think that is extremely important because it has the brand recognition that is immediately going to have people, check Airbnb if they want to go to a different city. What I do not like is the current trend of government backlash. We just saw, like I said, in New York City, passing a code essentially banning all rentals in the city, which will probably have a pretty major effect on Airbnb. Secondly, with short-term rentals, there's really no standardized customer experience. Now, Airbnb can offer a standard customer experience with their customer support, with their platform, with all of that. But when you're actually staying at a person's house, that's all up to the host. And in my personal experience and the experiences of many other people that I know have used Airbnbs, that's where the issue really comes to light. Some people are amazing hosts. They offer everything, and you just feel like you got an excellent deal staying at their place. They give you so much knowledge and so many extra comforts that you weren't expecting. And then you have the hosts that just complain or say you did everything wrong, try to get you to pay extra when you leave because you left the garbage can's lid open. So that's where there's always going to be some hiccups with this company. And there's really nothing that I think Airbnb can do to completely eliminate this customer experience issue and the lack of standardization. But it seems to me they're on the right track and they're trying their best to smooth out these curves and bumps as best as possible. And finally, I'm not really sure how Airbnb will perform in an economic downturn. I think due to the company being an asset-light company, as I mentioned as a positive, it can probably right the ship and be able to make lots of changes to kind of roll with the punches, whatever economic issues come its way. But that doesn't necessarily mean that the stock isn't going to take a major hit or the company's revenues and earnings aren't going to take a major hit. And at least to my knowledge, there really isn't a good company or place that we can look to see how a company like Airbnb can weather a storm, a la a 2008 or 2001 or 1980 type recession. Obviously, it's a consumer discretionary company, and so people will spend less and Airbnb will earn less in these moments. But just how well they'll be able to manage that and how well they'll be able to cut their costs in order to keep up with their lower revenues, that all remains to be seen. So overall, for my final thoughts, I am actually genuinely surprised by Airbnb. I did not expect to see as much value in this company as I do now. So I will continue with my research in Airbnb. And I think it would be a great idea if you continue to do your research as well. If there's nothing major that I see that, really keeps me from buying this stock, I may actually end up investing in Airbnb in the near future. So that's all that I have to add. Please let me know your thoughts in the comment section down below. And if you have a moment and you made it to the end of this video, please like the video and subscribe to my channel. It really means a ton to me, and I would love to continue to make content for you. And with that, have a good day, everyone. Bye.